Meeting recording has started.
Okay. So, hello all. A very good afternoon. Before I start, am I audible?
Yes,
Yes,
Ekta, we hear you.
Thank you so much. Myself, Ekta Dubey, and on behalf of the Brinalytics team and our title partner, Avaya India, we welcome you all and thank you so much for being part of our roundtable, which is Unlocking the CX Transformation by Neobanks to Scale Business. We have interesting sets of speakers today from the Neobank, and of course, we have lovely audience as well joining us today. So we're gonna encourage a lot of Q&A after the roundtable discussion, where our thought leaders will share their insights and perspectives from the Neobank space. So to start with, I will quickly like to introduce our partner, Avaya India. Businesses are built on the experiences they provide, and every day, millions of those experiences are built by Avaya. For over 100 years, they have enabled organizations around the globe to win by creating intelligent communications experiences for customers and employees. Avaya builds open, converged, and innovative solutions to enhance and simplify communications and collaborations in the cloud, on the premise, or a hybrid of both. To grow your business, they are committed to innovation, partnership, and a relentless focus on what's next. They are the technology company you trust to help you deliver experiences that matter. Here, as I told you earlier, we have interesting sets of speakers today from the neobanking, lovely thought leaders. So I'm going to start introduce each one of you and give it to our moderator to take over the session. So introducing our thought leaders for the day, Mr. Tarun Bansal, founder with Zigzag. We have Mr. Chirag Hira, head of customer experience with Jupiter. Mr. Shubharun Mukherjee, he's a senior director with Razorpay. Anjali Panwar, senior customer success manager from Frio. Mr. Saurabh Seni, business head liabilities with Checkbook. Mr. Angad Sandhu, he's the head operations and customer success with Pidgey. Mr. Abhinav Nair, founder with Mool. Karthik, a customer experience lead with FamPay. We have Mr. Adarsh Kaul, lead India and SAC marketing with Avaya. And now I'm happy to introduce our moderator, Mr. Rahul Bhave. He's a country leader, BFSI and strategic accounts with Avaya. So first of all, thank you once again, everyone, for taking out your time. And now, Rahul, over to you to moderate this wonderful set of thought leaders. Thank you so much, everyone. Over to you, Rahul.
thank you so much, Ekta, and welcome to all the innovators, thought leaders, and the people who actually execute something which was never thought before. So, welcome to all of you. Uh, just to start and give a perspective, first of all, am I audible to everyone? Okay,
We hear
uh,
you.
sure. So, probably about just a decade ago, nobody really thought that banking will go to that level, right? In fact, I used to invest in stocks, and I really didn't think banking was a great sector to invest because nothing much used to happen. There were no ups and downs, there was nothing moving sideways. So everything was just as usual. And today, it's a completely different world. So much so that our finance ministry is being pressurized to come out with a digital currency. So it's like a complete transformation. And while that is true, what what questions that come up in this environment is with such a huge existing financial environment with so many actually nationalized banks, private banks, cooperative banks, and God knows all other types of banks like RRBs, etc. To add to that, almost 9,000 plus microfinance companies. And now we are coming up with neobanks, insurtechs, fintechs. Uh, all this begs the question of how much potential there really is. Yes, we are aware of how much is the bank consumers in India and how much is the unbanked. But then there is also a reason for it, right? So will neobanks actually solve that problem is a question everybody is asking today. Okay? Apart from that, another question which comes up to everyone is with this model, eventually how big or how long is the sustainability model in place? What are the revenue models? How is it going to be a sustainable business for neobanks in the near future? And finally, who will actually win the customers? Because this is not an election. You really have to prove your worth in the entire market so that you actually get the loyalty of customers. So it's something where hard work has to go in, and I'm sure even elections, a lot of hard work goes in. But this is an even bigger scenario. So how do you actually get all those loyalty from the customers in place so that you can actually compete with the banks and add more value? So while a lot of these questions are in mind, I will first start with a very important question, specially targeted to the esteemed founders who are on this session right now. Is with all these banks and all this environment, how do you differentiate between the core banking or the NBFC environment and what neobanks are doing? Because if I understand, neobanks primarily set up between three areas, right? One is where you offer various banking services to the consumers at one place, or you could also offer a lot of wealth management services to them, and there could be other financial services that you offer, and all those things are finally linked to a core bank at the back or multiple banks at the back. So how do you really differentiate yourself from them, and what is it that you're actually trying to target in the environment? Because already the banks have the consumers, so what else are you trying to target? Or can I go with probably first Tarun, then Abhinav to start with, and I'll bring in more speakers as we go.
Sure, sure. Hi, Rahul. Hi, everyone. Good evening. So, from the a very interesting discussion, and especially for us, since we come from this industry, and we are building something in this industry, so we have to face these questions every day. So, one of the things that you said is how do we differentiate is, the first thing is that we always look for the large market, right? In that, and we look for niche segments in that. That's how neobanks differentiate from all the 200 banks or 10,000 NBFCs or all the traditional ecosystem that we have. So for us, in general, for the neobanks is that first is the large base, and then the niche segments within that base is what we look for, and we solve a very specific problem for that. So basically, it's not one size fits all approach anymore, which banks have taken so far. And that's where the neobanks come into the play, that we have the niche segments, we build niche products. And of course, with the data traces that we have available on different platforms, that becomes the base for us to enable this entire ecosystem.
Abhinav, can we hear your view of this?
Sure, absolutely. And thanks for the question, Rahul. I hope you're all able to hear me clearly.
Yes, please.
Great. Um, so it's an interesting question, right? About how do you differentiate yourself in what seems like an already crowded space? And I think rather than look inwards, we first sort of look outwards and think about, who are we really solving for? There are many ways to look at different customer segments, but at the macro level, the reason why we exist is because 95% of people in India do not compound their savings, right? They don't beat inflation. They gradually get poorer over time. And despite India having a very rich history of retail banking, which is much more significant and older than a lot of other countries with similar GDP per capita, we just haven't seen good outcomes from a customer's perspective, right? And that's really what we want to drive. The thing that I keep telling our team at Mool is that we're not even a technology company, right? We're a design and distribution company. We want to work with different manufacturers of products, make sure that the right products or services or terms get manufactured. And then we want to get this to the right person at the right time, um, so that this current model of financial patients basically getting whatever new medicine gets stocked at their local financial chemist changes, and people actually start seeing a financial doctor.
Okay. There is one more concept which is being spoken about quite a bit in the banking sector. Is today people are not, or rather the industry is not looking at growing more banking platforms as such. What they are saying is that banking should become another financial transaction on the spot. Like we say, experiences that matter. So it is at that point of experience, if I can do my transaction or do my banking stuff at that point, then that's about all I need to do with the bank. I really don't need a physical bank or a bigger plan. So, do you think that uh, what neobanks are trying to do right now, or the plans in the future, are actually moving towards that, or it's just a concept? We can start with
Happy to
Abhinav.
take the question, and then would love to hear from others as well. Um, Look, uh, I think on the one hand, we're dealing with the fact that finance and the financial industry it's a really industrialized space, right? There is a whole vocabulary of terms describing different kinds of products, and certain sort of services that are already pre-imagined, right? And now people are basically thinking that how can I use technology to lower acquisition costs, improve turnaround times, and just execute faster, right? um, I think the real opportunity exists in working with people to understand not how do they work with different financial services, but rather how financial services can be instrumental in their own goals, right? A lot of the times when we do customer research, the number one thing that we hear from the customer segment that I think a lot of us are interested in, which are young people in metros, but then also tier 2 tier 3 towns, is that they just don't know what to do with their lives, right? They have a sense that chalo aage badhna hai, kuch, bada banna hai, but they don't really know how appreciating the time value of money, compounding, their cost of capital can actually be tools in service of that goal, right? And so we really want to exist as a design layer that helps them curate that better life that they're interested in.
Okay. Uh, Tarun, would you like to say something around that?
Sure. So, what we've seen is customers, from the customer perspective, it's about the enabling the financial transactions. That's more important to them rather than looking at the face of the bank. And that's how we, are at our end also, we ensure that the experience, right, from the onboarding till we provide the suite of of all the services and products that we are building is seamless. So as long as that experience is delivered to the customer, right? Customer is fine. It doesn't matter whether it comes from bank A or bank B, as long as we are able to manage that experience for the customer. And as I said, customer centricity is something that we all go for right from day one.
Okay, fine. Uh, I'll move on to the next question. Unfortunately, every time I ask a question, a lot of questions come to my mind, but I don't want to bring all the questions onto this platform itself. So we'll move on to the next one, which basically revolves around the business models and sustainability that we're talking about. Because a lot of questions that come to mind that we, the way we understand neobanks is mostly the people that we will get in touch with. And then neobanks have other banks also, mutual funds or financing, lending organizations at the back. So there is a cost which goes from one layer to the other. So how much, obviously you can't make as many margins as you would love to have. So how does the sustainability work? Where is there a volume at which you say, okay, at certain kind of a volume, the sustainability will come, or is there something else that you're going to bring to the table which will bring that sustainability? Yeah, Tarun, we can start with you.
All right, I'll be quick, and then would love to hear from others on the panel as well. So from the sustainability perspective, neobanks also have got all the revenue channels that any traditional, not in the same sense apple to apple comparison, but most of the channels are available to the neobanks as well. Right from the revenue share, the arrangements that we have, right from the account to lending, to insurance, to investments, to the SaaS products that we build. So from the sustainability perspective, I would say that there are multiple revenue lines available, and it's a multiplication of the number of customers versus the revenue lines that we have. So from that angle, I don't see that as a challenge, though there has been a lot of discussions on that. But it all depends on what we deliver for the customer, and customer is always up to pay for the services that he or she likes. So from the neobank perspective, we all ensure that we build the products that they are ready to, take or buy. So that's more important, for us.
Abhinav, your view?
I would just turn this question around and say that I think it's banks that don't have a sustainable source of revenue, right? The traditional banking model is to borrow long and lend short and earn a net interest margin, right? And for the last 15 years, we've increasingly been in a world where yield curves frequently get inverted. Money becomes more expensive in the long term, and so that traditional sort of banking model may not always apply. And banks have responded to this by creating a number of sources of fee income, right? But the market is also waking up to this, and they don't like that very much, right? So I think as much as we talk about neobanks scrambling on very thin margins, it's important for us to really imagine how banks are going to continue to make money once they've at least exhausted this sort of subprime segment and other sources of expansion.
Okay. So from both of you, what I understand is customers eventually will decide one, how much to pay, whom to pay for, what kind of service to pay. And that probably, like Tarun mentioned earlier, a niche area where people really need these services and can pay for that. That probably could be a game changer. Which brings us block that stock in front of the customer. So let me take this question to Subharam Mukherjee to basically ask from customer experience perspective, what are those focus areas for you as far as customer experience is concerned? Because CX is a very wide terminology, right? So for everything people use CX, but how do you actually, what are those areas where CX really matters? If you can help us understand that.
Sure. And I'll probably thank you for that question, Rahul. Um, the way we look at it, right, in terms of what customer experience means is broadly divided into three core areas, right? So one being, I think a lot of what we talked about right now is around the infrastructure layer, which is where all the product lies, the integrations with the bank lies, what the products and offerings that they have, and how you bring that to the market. I think what is also very important is the segment of customers that we are talking to. There are two additional layers of experience that we are looking. The first layer of experience is around the whole ability to bring in applications and workflows which help them automate the tasks that they do, make it simpler, make it easier. And on top of that is what we call as the experience layer, right? The experience layer in itself is about adding value through analytics and information that possibly is not as easily available to the customers that you are kind of looking at. And we feel that the transformation, as far as banks or any fintech that brings into the system, is really around the application and the experience layer of things. And that's where, as I was listening to Tarun and Abhinav as well, I think a lot of opportunities for monetization lies there. A lot of sustainability of how the business model will work lies over there. As much as it is to leverage the existing infrastructure and to innovate on that infrastructure. So while margins will continue to remain tight around the infrastructure, but when it comes to the amalgamation of the core flows, workflows, and the benefits that organizations will see from the application layer, as well as the benefit that they would see from the additional information and insights that they can derive from the overlying layers, is where we believe both customer experience will improve and therefore the capacity to monetize, make this business a lot more sustainable and improve profit margins as well in that process.
Okay, that's interesting. Can we get some views from Chirag as well?
Yeah, thanks, Rahul, and good afternoon to everyone on the call. So much about neobanking is spoken about in terms of the experience is going to be very different. And when we started off at BFS, we asked ourselves this question as to, okay, what does this different experience mean? And the way we sort of like looked at it was when you look at truly transforming experiences, they are such that once you've experienced them, you can't go back to what you were using before. So once you use a smartphone, you can't go back to a feature phone. Once you start using WhatsApp, you can't go back to SMS. And the real sort of difference that we are looking to sort of add as a neobank is to have this banking experience which is so good that once you sort of have spent some time on any neobanking app, you go back to your bank and you feel like, okay, maybe this is not for me, and I had something so superior in what I was used to before, and that's where I want to be. Now, to be able to get to sort of that sort of dream state, the way we look at it is that every single customer experience journey needs to be elevated from what it is today, both on app and off app. And then this needs to be backed by a very scientific way of measuring the experience, because a lot of the traditional metrics that we look at when it comes to measuring experience are very arbitrary metrics, and it's very tough to do the attribution when it comes to them, whether it's CSAT or NPS, right? Often these metrics are getting into account once sort of the damage has already happened, so to speak. So how can you sort of like be a lot more proactive in measuring this experience to be able to elevate customer journeys? Is the way sort of we look at focus areas as far as experience is concerned at Jupiter.
Okay, that's interesting. So basically, you're saying that it's not just about measuring efficiency of a customer experience or process, but also making it so intuitive that customers don't feel like going elsewhere. That becomes the de facto way they want to do business. So if somebody is not able to meet up to that, then those people will be off the rails. That brings me to another kind, just taking your question ahead. If I can ask Karthik, from a perspective of CX measurement, because CX is something where, like we all know, what you can't measure, you can't execute that. So CH measurement perspective, where do you see, what kind of models do you see will work in this kind of environment? Because it's not the traditional environment of CRMs and those kind of applications, right? So it's NPS, like Chirag said, NPS and all are very old and very delayed now, because you're talking about on the spot experience. So how would you measure CX? What is it that you think will work?
Yeah, thanks, Rahul. Firstly, so I think to begin with, I think where neobanks are at a disadvantage from the traditional banks is they lack customer trust because they're new in the market and they don't have traditional physical presence. Customers find it hard to trust. Number one, right? So I think the first step is to earn the customer trust from a CX point of view, and how you can do that is one, be present every, right? If your customers are messaging you on Twitter, Instagram, Facebook, emails, be everywhere, right? Do not let your customers know that you're not there or some response is not attended to, right? By doing so, what you're doing is you're telling the customers that we are everywhere. You need help, we are there, right? You don't have to worry about your money or about anything, right? So first thing is the response management or the coverage of all the channels that we identify are potential channels where customers can reach out to us, right? So that's the first point of thumb rule I will take. And the second thing, since the channels vary, right? You have your emails, your live chat, your phone call, your social media. There are so many channels. You will have to chalk out your metrics or your success factors for each of these channels separately. That's what I believe. Of course, you will have your North Star metrics like NPS, CSATs, or some common North Star metric that all of them follow. But if you want to take it to the next level, we can start taking demographic data, seeing, which customer in which area is struggling for a particular issue or things like that. So you can have metrics bifurcated on demographics as well. That's something that, we also started experimenting and we're getting a lot of insights around that. But apart from that, your SLAs, everything is something that you'll have to keep track because another differentiator, what I feel neobanks over traditional banks is, the speed of the processes or the responses or the customer service that it can provide. compared to a traditional bank. So when you're already at an advantage, you will have to kind of probably ensure you have uh, some checks and balances in place to ensure that your speed of your support is also in place. So your SLAs becomes very important there, right? Apart from that, I also feel neobanks are in a space to do a lot more innovation compared to the traditional banks. So when the neobanks actually end up doing a lot more innovation or experimentation, a lot more dynamic nature kind of comes evolves within the organization, right? And so it's very important to be up to be with the pace at which you're growing, innovating, and at the same time always constantly hear the VOC of the customers, because you want to build the products for the customers, right? You don't want to think that this is what our customers like. Hear your customers out and build the products for them. So I think the VOCs, the SLAs, the North Star metrics, the CSAT and the NPS, and along with your other metrics that you identify specific to the channels that you're catering to, these are some of the important pointers we need to keep in mind when we're building a model for CX metrics.
Okay. One thing which I always get frightened of is the minute we start getting into hyper personalization. Basically, then there is no limit to at what level somebody can go to, because you can become as personalized as one divided by the population of India. So there's no end to it, and then measurement also becomes pretty complicated. But one important question that comes up from all this is neobanks are all about innovation, speed, making changes, trying to be closer to what the customer wants. While doing all this, my question to probably Saurabh and Shubharam is, where does the regulatory framework come into all of this? Because most of the banks and all are pretty heavily regulated. What they can do, what they can sell, what they can say, everything is pretty regulated. But I have seen new banks offering cards to kids below 15 years age or 18 years age, and a lot of other stuff. So where does regulation actually come in? Does it hurt? Does it any specific changes you think will make it better for you? What do you want to say? Can we
Yeah,
start with
hi,
Saurabh?
yeah, hi, good afternoon, everyone. So, Rahul, definitely a relevant question. So, being into a banking space, being a new bank itself, we have to take care of the compliance by the regulator. But in recent times, I've seen, and the people on the panel also must have seen, so regulators have also loosened their scope of compliance to just to accommodate the tier 2, tier 3 cities customers. So, at Checkbook, my customer base is basically small business owners who have turnover less than 40 lakhs. So if I need to cater to these business segment and the people who are underserved by the majority of the banks, I need to go beyond the traditional method of banking and provide banking to them at their doorstep, just to involve into the normal banking scenario. So considering the recent transformation, which if I quote example of digital banking units or expansion of scope of video KYC to the constitution as well. So I think regulators somewhere they also understand the scope and the kind of importance of banking to be expanded to these tier 6, tier 2 cities where the physical presence of banks are not possible. That is the space where new banks come in. So we provide that anywhere, anytime kind of a banking, which definitely is quoted by multiple traditional banks, but still they're not up to that level where new banking space is evolving. And we are getting the clients and getting them the banking on our app and instant banking, definitely with the backend of the banks. But considering the entire compliance framework, I can see the regulators are coming on board and providing much more capabilities in terms of losing the compliance field and keeping the core compliance in center, but still multiple other things which were not open to us earlier now are being opened.
Shubharam, any
And
views on that?
yeah, Rahul,
Sorry.
we firmly believe that the regulatory environment is fairly collaborative and has moved um, very proactively in the very many right directions. Now, uh, does that always mean that life becomes easier for us wherever a new regulation is tweaked or a new regulation is introduced? It is not, but we believe that in the larger scheme of things, it is good for the organization, good for the industry. Because again, as I think Chirag or somebody was pointing out, that trust is the Karthik was pointing out, right? That trust is the key factor, right? Even last year, if you look at the spaces that we are in, right, the whole regulations around mandates and tokenization of cards and prevention of holding cards at certain places and so on and so forth. Caused a lot of upheaval in the entire industry itself, but we firmly believe that it's a right direction because it increases the trust in the system. And when the increase in the trust in the system kind of goes up, uh, both penetration of digital money increases, people become more active participants. And in the longer run, I think everyone will reap the benefits of that from the regulatory changes. Of course, as I said, that at every point in time, every regulatory change is not easy. Sometimes it means more work on our behalf. But I think most of the changes in the last few years have uh, positively impacted the confidence people have on neobanks, on fintech, on the entire ecosystem at large. Uh, because at the end of the day, we do operate with something which is very very precious, right? And it's a very critical commodity to everybody. And the more the trust, the better it is. And I, at least from my personal experience, I feel that the regulators are moving in the right direction to be able to give more and more confidence to across the board that they are trying to bring that confidence into the system.
So, regulation is one part of it, but that also one more aspect that comes in, which probably is not, I don't know whether it's that regulated in the banking sector, but underwriting is another important thing which is going to come out, right? Because the kind of consumers you are talking to, as we call it, the underserved or the unserved, I have from my reading understood that it's not the standard underwriting parameters that you guys go through. You're looking at social media, you're looking at my buying patterns, you're looking at my shopping patterns, and in the US I've seen people looking at driving patterns as well. Multiple things are being looked at before you actually lend something or you do something with the consumer. Do you think this is really helping? How accurate are these underwriting parameters? Is it much better than what the standard parameters are, or it's still evolving? And sorry, I can ask this question to the people who are looking at ops right now, Shubharam or Saurabh.
So yeah, Rahul. So I would say that the traditional writing definitely is nothing which is better or which is worse, but both have their own advantage. Like the kind of customers we are catering to, so definitely they require a different type of underwriting. So if I go and do the normal traditional underwriting for these people, they will never qualify for a lending. That's what they are struggling to get the proper business funding from these traditional banks. There we have to come and we have to do underwriting. Definitely the underwriting is important, and the security of funds or the end use of funds also is something which we have to ensure. But we don't want to choke the client capability of getting some funding from banking or financial institution just because of the stringent norms of underwriting. There we have to play and we have to rely on certain parameters which are not relied too much in normal traditional banking underwriting. We look at customers bureau pull, we see the customer transaction, we see the customer, that right now you see the evolving pattern. Now the personal discussion also being done on video call, right? So where the customer place of business, customers documents and everything can be verified through video PD itself. So definitely we have to evolve the underwriting in a way so that these all these clients should be encircled and be benefited with to the ease of funds from the financial institutions. That all we have to do.
And my view is, I do agree with Saurav in this view that the underwriting principles are very, very crucial because while we want to serve the underserved, the unserved, at the end of the day, again, you do not want to create a problem of lemons for yourself and for the entire market as well, because at any point in time, all the participants were doing some great work in this space. Any point in time, something fails, right? It's a big setback for the entire ecosystem. Um, it kind of percolates the distrust, the bad publicity, if you can call it, kind of percolates across the board, across the entire ecosystem. Therefore, I think that with the amount of technology and the investment into technology that a company like Razor Finance puts in, uh, we definitely collect a lot more information within, of course, the framework of what we can collect and what we can use. But we do that, and that in itself can vastly, enhance the way underwriting happens for us, for the financial institutions who are a participant in this entire ecosystem. And I think that data definitely today, while underwriting is very unidimensional, has been very unidimensional, we just want to increase the number of dimensions to it. That does not mean that the underwriting process itself will become a lot less stringent or a lot less lax about it, because again, the implications of making it lax is going to be very, very deep on the ecosystem. And we believe that the data that we have can deeply enhance and do better underwriting than what currently happens on the parameters. Right? So at least for us, we believe that underwriting is only going to become stronger with the kind of data analytics information, behavioral patterns that can enhance what already exists.
Do we have Angad also on this call? Seeing him.
Hey, yeah, Rahul.
Yeah.
Some bad network.
No, no problem. I think the same question I wanted to ask you and go a little further on that is, with the earlier underwriting processes and earlier, even the CX process, but underwriting more critical because it's a little more regulated. A lot of the banks had quite a lot of standardization. You could actually even compare bank performances with some ratios and all of that stuff that we used to do. Now with every new bank, free to look at customers the way they want and underwrite the way they feel is the most accurate way of doing it. Do you think that this standardization will ever come across this industry, or it's the differentiation itself that will drive the whole industry on the underwriting platform?
I think initially everyone would be trying to figure out the right matrix because there's so many data points that everyone collects, like just from location, or like you mentioned, the driving data. Pre-pandemic, it used to be whether you're daily going to office or coming back or not. So there's so many data points there are there in that consideration to finding the right set, right pattern, and then figuring out which works in long run. It might take some time, but yeah, at some level, I mean, most of the time the data sets would start replicating at certain stage. So for now, yeah, every company would probably have some unique data set around it. But with time, we would see probably some standardization around it, or due to embedded finance, probably there would be already organizations giving those set of collected data points to you. So it will get easier from you, from what I understand.
I think what you guys have done in the industry is, I shouldn't use this word on this platform, but you've kind of screwed up a lot of plans of the Central Finance Ministry. Yeah? There was a lot of blockchain development happening around data standardization across banks, and now we see that it's totally turned itself over the head. So I'll ask the next question to Paritosh Gandhi, who looks after the technology and product roadmap for Avaya. Pari, are you there? Paritosh?
Yes, I'm there, Rahul. Just be there.
Yeah. So, Paritosh, what we've heard so far is more how neobanks are looking at customers, right? They're looking at niche segments. They're looking at various previously unused underwriting parameters. They're looking at CX in a very different. They may not even measure CX the standard ways like NPS, etc. So, given all this in mind, how do you think the technology of today would help in this? Especially because Avaya is also into the customer experience space, or rather, that is the only space you guys are into. So, how do you think you will be able to help this? Because not only is the technology going to enable all this, because these are all digital banks, right? Not only are they going to use it, they're also going to use it for loyalty, which used to be exactly opposite of what the earlier banks thought, right? The banks and insurance companies thought as long as it is face to face, the loyalty will be there. Now there is no face to face; it's all digital. So customer experience becomes very critical for building loyalty as well. So how do you think technology will help us?
Yeah, thanks, Rahul. So I think I've been hearing a lot of views from multiple different stakeholders here, and I think a couple of points which have rightly been said is one is innovation, one is flexibility or agility, changing things quickly. I would say tapping multiple different channels because this is all digital, right? And people are not looking at a typical branch kind of a things. So I think as Avaya being into the CX part and we have been serving a lot of large enterprise banks, I think this world is totally different. And what we have done is with the whole ask or the demand or the way the technology is moving around, Avaya has come up into the complete cloud-based solutions. We have been focusing a lot of into digital. So I think a couple of key things which we do, and I think somewhere you will agree to me is having an integrated omni-channel solution. Okay, because still we have been talking from so many years. I would say that when a customer call lands into my place or he wants to speak to my representative, who maybe who's on an iPad or is an RM or sitting at home, he should be knowing that this customer has reached out to me when and where earlier. And still what happens is in the technology world the systems are different, it is silos, and we don't know that okay this customer has, and we don't know the profile of that. So I think one thing which comes out very clearly out of that is that you need an integrated omni channel solution, because for the banks like you, I think digital channels are more important. And the kind of even this target segment what you're looking at, uh, okay, so people use more of digital, so more, they are more prevalent on the social and the WhatsApp and all those things, right? And it is very important to tap those things. So I think that is one of the important things which we have been doing with our cloud omni channel solution which we have launched. I think next piece which I would like to address is speed to deploy and scale up scale down, because uh, it cannot be a traditional way. I think somewhere we need to quickly change things, the kind of feedbacks or the voice of customers, I would say algos, or I would say enabling or disabling some of the features, or proactively calling some people, measuring those calls, all those things, which becomes much, much easier in a cloud, okay, than to a normal enterprise telephony kind of, or enterprise contact center piece which large banks uses. So I think with this, I think there is a tremendous change on what we have been doing. uh, and last but not the least, I would say is the the importance of integrating with the open APIs, because you guys are working in a different manner, and agility and innovations has been happening. I'm sure uh, the tech part of yours would like to do a lot of close integration with the technology, right? And that's where the power of open API comes in. So that's another piece we have put in, and we have completely opened our API so that people can use those APIs and make the use of the whole platform which is there on the cloud in your way. So it could be that, and because see, all you guys are focusing mainly on the app first kind of a channel, right? Or the web kind of a channel. So that is where you need an integrated controls and integrated, I would say, the digital interactions or the journey part and all that stuff. And that can only happen if we have the APIs open and you want to make it work your way in a your. I would say I would give it to you guys that uh, with the kind of interface what you have, the UX what you have, we have never seen earlier. 1 year back, if somebody would have talked of these kind of interfaces or UX coming onto the apps, never would have thought of, right? And that's the key USP also, what you have a differentiation to the normal banks. So I think integrating with these open APIs will also make a difference. I think these are few things which we have been doing for a new age banks and new age companies, whether it's neo banks or any other startups also. But that is becoming very important, and that's where we are making a relevant sense there.
Yeah. So finally, I'll go back to Abhinav and Tarun again. Is in terms of neobanks and the future roadmap that we can see in India. Where do you see neobanks headed? Because I have a gut feeling that it may not. Though we call it neobanks, insurtechs, fintechs, I think somewhere I have a gut feeling that everything might actually merge into a single kind of experience for the customer. Do you think it will go that way, or what is your view of the future of this entire?
Look, I don't think that neobanks should present some kind of disruptive paradigm shift of the BFSI sector in India. I think it should be part of a natural, timely evolution. And because it didn't happen from the incumbents, that you see all of the really bright people on this call moving the needle forward, right? And one of the reasons that that's not happened is really because of regulation, right? While we really welcome and appreciate some of the initiatives that we've seen in recent times, we've seen the government make all the right noises on this, and some of them have even materialized into sandboxes at the RBI. Um, I think there's a shift in how people should look at the goal of regulation here, right? The goal of regulation should really just be consumer protection, right? We shouldn't be lending at 40% APR and call it financial inclusion, right? Um, we shouldn't be tied to underwriting using credit scores, because credit scores are a terrible instrument to underwrite credit with, right? They're 30, 60 days late. There can be times, and this is where technology can help, right? And just to tell you a quick example, a recent Uber driver I met had a second line of business. He would trade pipes during the day, drive Uber at night. During the pandemic, he had to default on about 10 lakh rupees worth of loans that he just couldn't push through. Now he can't even get a loan for a mobile phone, right? So these are the kinds of things that we can solve for. And as we do this, and as we apply technology to this and figure out, oh, if somebody drives from point A to point B on a regular basis, we should also make sure that we're, as an industry, underwriting using fair characteristics, right? That don't confuse correlation with causation, that don't discriminate on the basis of things that we shouldn't be discriminating on, even if it suggests that the payback is the probability of payback is higher, right? And so ultimately, what people need to do is evolve to a model where we are regulating processes, not even products, and definitely not identity, right? Like the RBI sort of approach on small finance banking and on tap licensing has been that you have to be a promoter with 15 years of experience, and this is the very traditional background that you should have, and then we will consider you, and and the regulator will sort of pick and choose who gets to enter what business, right? So we should move to a model where anybody who has the ability to execute a certain process and enable consumer protection should have the ability to enter a business on their own terms without relying on banks, without relying on NBFCs, be able to do whatever they want to do on their own books, and avoid these kinds of situations where, like our relationship manager at a traditional bank, like, can just look at my bank balance, right? And it always makes me feel very uncomfortable when they do this, right? Because usually if they see a high balance, then they'll come to me with an expensive ULIP product, right? So even the disintermediation and depersonalization that neobanking offers has opportunities for improved consumer protection, right? And lastly, I think what I can say to this audience is that it's really up to us to collaborate on a public asset and make clear what is fintech doing for India, so that the conversation on fintech is not just about the sky high valuations and millions of dollars being given to people in their 30s, but really the impact and the positive story that we're able to drive forward.
Tarun, can we have your views?
Sure, sure. Yeah, I mean, I would say India is still in the nascent stages. I mean, in terms of the neobanks evolution. And if we look at across the world, we've seen, the successful stories in the US, Europe, and even in Asian market. Look at the way, many multiple neobanks in the Chinese market. So there's a bank called MyBank, backed by Alibaba. They have this model of 310. So it takes them, 3 minutes to apply for a loan, 1 minute to approve, and zero wait time. And they've built a book of more than $300 billion on that. So if we look at that, India is still at the start. We are still scratching the surface. We have got our technology infra right. thanks to the public services infrastructure which is available to us, UPI, Neobank, open banking, AA, OCEN, all this is available to us. So thanks to the government, thanks to the regulator. Second is regulator. If you look at from the regulator's perspective, they have been quite receptive, on this overall ecosystem, and they have recently come with the digital banking units, and I think they're gonna come back some regulations on the differentiated banking licenses also. So if you look at the overall ecosystem, it's quite promising, right? And this is just the start for the Indian ecosystem from the neobanks perspective. We have a long way to go. Customers have started trusting, which Karthik raised, that trust is very important, and trust comes from, one of the things that we have seen in our business is that trust comes if you solve a particular problem. The customer starts trusting you if you are their partner to solve their problems. So from that perspective, the overall ecosystem is quite, I would say encouraging. And we see this in a positive way, and see, along with the regulator and with the banks, and of course we don't see banks as our competition. So it's all about collaboration, and right, fintechs understand this, banks understands this. So overall ecosystem is quite positive. I think you are on mute, Rahul. I'm not able to hear you.
I'm sorry. Am I audible?
Yeah, yes.
Yeah. Yeah. I said, keeping this in mind, one last question to Saurabh, Shubharam, and Angad from the ops perspective is typically, if you look at the earlier banking environments or even insurance, we've seen most of, people normally have very old, I shouldn't say this, but very experienced people to manage operations or risk and all of that, right? Because they think they know all the possible scenarios and what can happen, what cannot. They have the parameters in their minds. But now with this kind of environment where everything is getting reshuffled, everything is coming up from scratch, do you feel uh, do you feel a lot of stress to get these parameters in place to be able to continuously monitor and see what works, what doesn't? Or do you feel a stronger regulation might actually make it easier? This is probably not a very formal question, but something which came to my mind because everything is changed, right? Nothing is as it was earlier. So do you think that creates a lot of stress?
Rahul, I think considering the you said the experience with the traditional banks, that's why the new banks are replacing the kind of a customer experience, the ease of banking, ease to lending. So in that way, I think we have different checks in place to handle the kind of customer experience is concerned, or kind of risk is concerned. We have all those checks. That's why the technological advancement is playing part in that way. And I don't think the experience, you can say that experience will be replaced by the digital capabilities or technological advancement will play a part in that. So I don't see a challenge. Definitely, there's a stress to manage the expectation of clients in that way. I don't think it will be a great challenge to manage that.
Any views?
Yeah, and I think, yeah, Rahul, I would kind of agree with Saurabh on that. That I do not believe it's primarily going to stress that system, because at the end of the day, the why neobanks are lucrative for at least our customers is the whole ability to generate that experience, and generate that experience with a certain amount of speed. The response times are shorter. Possibly it is more proactive than it is reactive. Um, Traditional banks operate a lot from the perspective that solve the problem when the problem has happened. But I think where what we are trying to do is to be able to proactively identify problems. And the good part is, it is not that the collaborator system, which is the traditional banks, are averse to the idea. It, they also want to do the same thing. It is just that uh, we are creating a lot of the infrastructure, a lot of the capabilities with which you should be able to do that, and do that at scale. Um, Therefore, the technological advancements which kind of drive this will be able to do it at scale. So therefore, we do not that there is going to be an additional stress as this scales that can we maintain this experience at that level. The experience from the very beginning, we designed in a way that it is meant to scale because otherwise this is not a sustainable model if you could only do this for a small set of people out there or companies out there. So we believe that this will not stress that system. Of course, there will be continuous innovations required to be able to continue to scale at that level, but I do not believe that it will exponentially increase the stress as it kind of scales.
Angad, any views on that?
No, I totally agree with Shubhran that the systems that right now are being built with the neobanking side, they are being thought towards the customer experience side and to build for scale. In fact, the most common thing that I think everyone is trying to is when a customer reaches out, we don't have to work on multiple channels or make the customer visit a branch or something. It has to be solved then and there. The first call resolution should happen then and there. So a lot of systems, even what we are building internally, is giving that operational dashboard level of service to the customer so that whenever a customer calls, everything should be handled from one point rather than spreading it across, unlike in banks with the various departments where the information is scattered. Since we are starting with a small segment, it is easier right now to consolidate that information in one place and service better rather than getting it scattered out. So definitely, I mean, with time, more innovation, like Shubham mentioned, that it will need it, but it wouldn't affect any of these systems as such.
So, but this has been a wonderful session. Unfortunately, we are reaching the last minute of the time that was allocated. I had a lot of other questions, but I think we'll have to do it on some other session. My sincere thank to all of you. And let me close this session by saying I am almost 46 now, 47, and I'm truly amazed with what you guys have done. I mean, and it's not just because I'm on this session, but I'm a true believer, or not believer, but I don't know. You guys are an inspiration. What has happened? I was not somebody. I didn't touch cred when it actually came. I didn't do anything on cred because I didn't believe it added any value to the overall economy. But the way things have moved, I've started doing a little more research and I've figured out there's so many things that happen. So wonderful to have you all here, and it's been an absolute pleasure having you all here. Thank you from my side. Ekta, over to you.
Yes. Hi, Rahul. Uh, so, do we have any questions remaining, Rahul? Or like any final thoughts? Any closure on that? Anyone?
From my side, nothing else. I have a lot of questions, but this probably is not the forum to ask them.
So, I think we should conclude, right? Like it was a great discussion.
Yes.
So, yes. So, like on a closing note, I would just like to thank all the thought leaders for taking out your precious time, and of course, our audience, and of course, Avaya for sharing your insights on the neo banking space. We would be sharing the video with you guys, and also would love to connect with you to Avaya for one-on-one brainstorm session at your convenient time. So, I'll be reaching out to you again, and that's all. Have a lovely weekend, and thank you once again so much for taking out your time for us. Bye, everyone.
Thank you.
Thank
Thank
you.
you very much.
Thank you, everybody.
Bye, everyone.
Thank you.